Hey there, this is the first of our weekly Bitcoin price reports to keep you up to date on the macro fundamentals and technical analysis of Bitcoin and a focus on the Bitcoin price. This video is for educational and informational purposes only. This is a critical week for all investment markets and anxiety has been building. It comes at the heels of the Fed meeting where Jerome Powell reiterated his hawkish stance on interest rates last week and his Volcker emulation. Volcker raised rates to 20% to combat inflation in 1981. Markets are continuing to recalibrate to the idea the Fed will hold firm with interest rate increases much longer throughout next year, while quantitative easing is moving forward. The end of September has historically been much more negative in general for stock markets. Also, October through December is coming, and the last quarter is often when some sort of capitulation or market low occurs. So stay tuned and subscribe to this channel so you don't miss out on some great times to buy Bitcoin. So let's start with the Bitcoin price today. It went up 5% to about 20,200 as the dollar index corrected lower against other currencies. For the micro analysis, we'll just look up the CBBI.info index from Colin Talks Crypto, and it shows 7, so that indicates it's a good time to buy. I mentioned this index in a previous video. Anything below 10 is very good. As you can see, we are near cycle lows. If we get more downside in the stock markets, we can probably see this index go to 0, but there's no need to be too greedy. One major piece of news this past week, the Russian Ministry of Finance and its central bank have agreed on a draft bill allowing Bitcoin and cryptocurrency payments for international trade settlements. So this is fundamentally good news. However, the Bank of Russia still opposes the legalization of cryptocurrency exchanges and settlements in cryptocurrencies within Russia. So let's get to some technical analysis. Before we get started, one important but simple technical analysis indicator is support and resistance. All-time highs are lows, or past year highs are lows, may give us support and resistance levels to look for pivots in price or a strong continuation of a trend. High price levels become resistance, low price levels become support. If prices move up or above resistance levels, such as breaking through an all-time high, for example, there's usually a blue sky effect where prices make major moves up because the sky seems limitless. On the other hand, if we break key support levels, we can continue major moves downward. Usually after breaking support or resistance, there is usually a retest in the opposite direction. For example, Bitcoin, the recent low of 17,600 is support, and the 69,000 peak last November is resistance. An example of a retest would be if Bitcoin broke below support down at 17,000 and then retested to 17,600 before heading back down to, let's say, 14,000 or lower. Just as an FYI, we'll keep using these support and resistance levels as our baseline technical analysis indicator. So let's go straight to the charts and do some macro analysis at the same time. The S&P 500 is effectively at the previous low of 3650. If it breaks down with strength today or this week, we may be heading to the pre-COVID high levels or retest right after the post-COVID downturn rebound around 3260. The post-COVID rebound is a great example of retests of resistance and a breakout in 2021. Again, the S&P 500 is reaching the critical support level of 3650, which were the June lows, and is bouncing off support at the opening today. So this is a good example of support. The Nasdaq is not quite there, but getting close to the support. The Dow actually has already breached its low. In a stagflationary environment or real asset cycle, as I discussed in a previous video, the best assets to own will probably be gold, oil, aka black gold, and Bitcoin, aka digital gold. We'll call this the triple gold strategy. There'll be deflationary pressure and bouts of liquidity crunches that could take any of these assets down sharply, so it's good to be prepared. Hold strong on convictions, and these could be great times to accumulate. So we can see in this gold chart that gold broke down its previous support level at 1680. We see another support level at about 1560. Oil has broken down and is back to its pre-COVID peak, so there's a very strong support level there at 77. If that breaks down, another support level is around 6160. Bitcoin has had very strong support around 17,600 and has held between around 19,000 to 20,000 this past month. The foreign exchange market seems to be especially vulnerable this week. Will something break? Yields on the UK bonds have increased while the pound is depreciating rapidly. Increasing yields and devaluing currencies are typically what leads to a crisis for an emerging market country. But this is the UK. Increasing yields are supposed to draw capital in and strengthen currencies, but a loss in confidence of countries' sovereign debt leads to the selling of a country's bonds and currencies at the same time. The pound sterling went as low as $1.03 per pound sterling. It's since rebounded a little bit. The Eurozone has been experiencing the same. Higher interest rates, but a depreciating currency. You can see the euro dip below dollar parity this past month. The pressure in the UK and Europe has come from the energy crises. Energy is priced in dollars, and as the dollar strengthens, energy prices soar. The Bank of Japan intervened in the foreign exchange market, and that rarely ever works. The yen depreciated as low as 146 to the dollar, but remains around 140. We can see the dollar break out to recent highs yesterday after correcting some today. Brent Johnson from Santiago Capital mentioned that the release valve for the sovereign debt crisis will likely be reflected in the currency, and we can see massive devaluation in the euro, the pound, and the yen. The dollar is currently the least bad currency by a significant margin and is a release valve for the weakness of all other major currencies. The dollar is the reserve currency of the world and is the standard currency for a supermajority of commerce. There are over 13 trillion in loans outside of the US, and much of that aren't originated by US banks. The dollar milkshake theory is the idea that the dollar will continue to strengthen as the Fed sucks liquidity from the market and drives up demand for the dollar. Brent Johnson contends that if a foreign dollar borrower defaults on its dollar debt or sells local currencies to buy dollars, the dollar should increase in value. Either way, the dollar gets stronger. The sovereign debt crisis is the final endgame bubble and can lead to wars and political unrest. This will be a great reset if you use the language of the World Economic Forum. Central banks have a lot of tools though, so they can likely avoid immediate disaster. But we're getting close to the last stages of this debt-based money cycle. We'll do a video on the global debt-based money system and how it relates to the sovereign debt bubble in the future. In the meantime, we'll keep you up to date on the micro, the macro, fundamentals, and technical analysis of Bitcoin with a focus on the Bitcoin price. Please like and subscribe, and see you next week.